Wow. So I was the Young Professionals representative for the Western Division in 2016. And the room that we used to have back then versus right now, I mean, I can't even believe it. I think it's more than 300 people, Mayor? Where's Mayor? Or maybe 400. This is amazing. Please give yourself a round of applause. So my name is Neil Patel from Austin, Texas, and I was elected to be an officer for AHOA in 2019. And I became the chairman in 2022 and 2023. And as we started, everyone wants to take our industry from here to here. Every single leader, every single board of director, every single ambassador, and especially our membership. The only way we can do that is if we all work together. And every single person will have a different direction on how to get there. And we have to respect that, and that's completely okay. So what are the challenges that we are facing right now? If you remember, back in the day, Blockbusters was taken over by Netflix. Taxi service companies were taken over by Uber and Lyft. Is something similar happening in our industry right now, where we have short-term rentals taking over the market share? Think about it. Technology is supposed to help us, and it is helping us when it comes to our labor challenges that we're facing, our revenue management, operations, financing, and so on. But it's also hurting us. So we will definitely keep a close eye on that as we move forward. And we want to make sure that we leave this industry in a better shape for our future generation. And that's always been the goal for every single person. In 2020, my vice chairman was elected. And at the time, I was the youngest person ever to be elected as an AHOA officer. I was 27, 26 at the time. And then Bharat Patel from Florida got elected, and it was completely the opposite. I think, what is it, Bharat, 65 right now? But that's okay. And I did not know if that's a good thing that he got elected or is it a bad thing that he got elected. Because as a younger person coming into this association, we wanted to bring change. But at the same time, I'm like, man, now we have an older person. How is it going to work out? And then at the time, my chairwoman was Jagriti Panwala, who you will be hearing from soon. And she taught us and the entire team the perspective of diversity. And when Bharat got elected, I still remember, we were never friends. I didn't want to hang out with him after the board meeting. I'd rather hang out with our friends. I didn't want to hang out with them at the convention. But naturally so, we became so close in the leadership as we continued to progress through the ranks in AHOA. And one thing I learned, it's so important to have a balanced team. There were times when we disagreed, but there were at every single time when we disagreed, we convinced each other that this is the right way to go forward. And disagreements are always good because you get a different perspective. And we want to ensure that our young professionals know exactly that. If there's no disagreements, you're not doing justice to your membership. We're not doing justice to our industry. And as I said earlier, everyone wants to take this association from here to here. And now Bharat is going to be the chair for 2 more days. And we have Miraj, who's going to be the youngest chairman, even younger than me. So as I said, the balance that we talk about. And it's important. And it's our job to support each and every leader in our association. Because at the end of the day, we are 20,000 strong, 34,000 hotels. 60% of all the hotels in the nation are owned by our membership. So we're not just AHOA, we are the industry. Keep that in mind. Any changes that we make as an association, any agenda that we push as an association is shaping the future of this industry. And as I said, there are no right or wrongs. You have to be you have to think about what we want to do, and it's okay to take risk, and it's okay to fail because we'll learn from our mistakes. We cannot expect different results if we continue to do the same thing. And the reason why every one of us is here, it's because we want to learn from each other. That is how we excel. My first AHOA conference was in 2014. We only owned one hotel at the time. And then learning from my colleagues, learning from the speakers, especially the Young Professionals Conference that we had put up, and other sessions that were specially tailored for young professionals, I learned a lot on how can I diversify my portfolio, how can I grow my portfolio. And that's exactly what you'll learn today. So with that said, I would like to give a huge round of applause to the Young Professionals Director. You have Tanmay Patel and Dylan Patel. If y'all can please join me up on the stage one more time. And I would also like to invite the Young Professionals Committee. If y'all can come up on the stage and please join us. And it's because of these leaders that we have, there are a lot of Young Professionals Committee members. Get up and come out. And I want to thank them because they decided to get involved. Getting involved is one of the hardest steps. But what's even more harder is to implement the things that you're talking about. So, Bharat, if you can also join us, please. And Mayur, you're on the committee as well, whether you like it or not. And I would like to give a huge shout out to the entire team. And we'll have Tanmay and Dylan introduce their teams. And please give them a round of applause.
Can we slide down one step?
Yeah.
And then,
Tanmay, can you? Okay.
Tanmay, stay in the middle. You two.
Yes. Thank you. Yeah, Tanmay or Dylan, one of y'all, if y'all can just go over. Okay, perfect. Name, where you're from, let everyone know.
My name is Rhea Patel. I'm from Cincinnati, Ohio.
My name is Viren Patel. I'm from Huntsville, Alabama.
My name is Suraj Patel. I'm from Dallas, Texas.
My name is Aryan Patel. I'm from Boston, Massachusetts.
My name is Krishna Brucia. I'm from New Orleans, Louisiana.
Thank you. Please give them another round of applause. All right, y'all may exit. And now, it is my honor to introduce your chairman for AHOA, Bharat Patel from Florida, from Sarasota, Florida, to say a few words. Please give Bharat a round of applause.
How much time do I have, Neil?
Hey, we have until 4:30. No, 5 actually.
All right. So, great introduction, Neil. So, when I joined the board, when I became an officer, Neil and our association is unique. And I'll tell you this, I've been on more than 30 boards. You probably can recognize some of that. I've been on boards where we have more, like 40 board members. I've been on boards that have like 4 people. Budgets that are 100 million and budgets that have like 200,000. All right? I first started serving when I was 17 years old, believe it or not. So I'll tell you this quick story. I was in high school, and the United Way said, any student leaders want to come and join? And so I joined it. So this was back in 1987, so you can do the math. And in 1987, probably a lot before any of you were born, we went to a domestic violence shelter. And at that point in time, they wanted $20,000 to do a couple of things. This was Daytona Beach, Florida. And I say this, there was only me and one other student leader, her. We both had the courage. We have the mayor, we have a state senator, a state rep, and the list goes on. Some pretty powerful people. But we were the ones pushing to make sure that they got their full funding, which is kind of ironic because today they would be laughed out of office if they didn't do this, right? So courage is something you gotta have at your age. Second thing I share with you is, so in 2004, my dad, we decided that I would run the business and he would take a back seat. So my dad always reminds me, 2004 was the first year he filed a tax return that was late. It's because of me, right? But I learned my lesson, right? And in 2004 also, we bought it on July 23rd, 2004. the hotel. In August 6th, 3 hurricanes in 3 weeks came by. Charlie, Francis, Ivan, in Florida, in Sarasota. So basically, I was working 7 a.m. to midnight every day. I'd be lucky to get a night shift person to come and work. All right, eventually it changed, and I'll tell you 2 more of the quick things. The person that I bought the hotel from took the staff from this hotel down the street to the old Hampton, which became a Comfort Inn. Sorry to name the brands. And so area protection, there's a couple of things you should learn from it, but you learn always from your first hotel. I think one of the young professionals told me there, from your first hotel that you manage on your own, you will learn everything you need to know about life for the most part, right? So that's the other lesson I would take about adaptability. So for all of you here, this is your association, all right? You're the next generation. I'm a second generation hotelier. You're probably second or third. I think I've met one fourth generation hotelier. This is a great industry, all right? But learn when to stand your ground and what you really want out of this. Because like my son was talking to me, and he's in the audience, look, this industry had double-digit rates of return. We don't have that anymore, all right? I'll be very clear. And so if we're going to spend this much time, this much capital, and this much return, that's not going to cut it. And I've told every franchise director that will listen to me, every leader of every brand, the same thing, all right? And the thing that I always get asked about everybody is, why are Indian Americans, Asian Americans so successful in this industry, right? And I think you heard of it, a little bit of it from Liam, and you'll hear it from other speakers tomorrow, and today you heard. Look, hospitality is in our blood, it's in our DNA, all right? The second piece is hard work, right? So I'll leave you with this, because we're running low on time. 3 lessons my parents taught me. So one is, get educated about whatever you want to do in life. Whatever your dreams are, get educated about it. You got to work hard if you want to make your dreams successful. The third thing, they all said stay out of politics. So hope you catch the irony in that. I didn't. But what I will say is this, is that, follow your passion, right? But always have something to fall back on. So hopefully that shared you some of my wisdom. Thank you very much.
Thank you, Bharat. Now, we'd like to get started on our education session. And I would like to introduce our first panelist, our chairwoman, Jagriti Panwala. Please come up on the stage. And also, Sanjay Patel from MHG Hotels. Please give him a round of applause. So if y'all can just introduce yourself and for the audience on what you're doing right now, how you got your name, company, where you're from, and so on, that would be appreciated.
Yeah, absolutely. So I think I know many of you, maybe not all of you, but my name is Jagriti Panwala. I am a small business owner. We own 8 hotels. Our hotels are located in New York, New Jersey, Pennsylvania, Ohio, and in Dallas, Texas. Been in the hospital industry for 24 years now. I also have another business, which is also a passion of mine. I have my own company, which is a wealth protection strategies, where we do a succession planning and wealth management for a lot of corporations and also business owners. We also own adult daycare centers in New Jersey and internet marketing companies. So very diversified. I was also chair of AHOA in 2019. I've volunteered for AHOA for 11 years, starting honestly from young professional committee members to ambassadors to becoming a board member, then eventually becoming, the chairwoman for one of the largest hotel organization in the world. After my long journey with AHOA, I was asked to be on the board for American Hotel and Lodging Association, which I'm serving as a board member for 4 years. I'm participating in their political action committee and also the owners council. Been happily married 23 years. I have 2 children, 19-year-old daughter who's in college right now, and a 16-year-old son. And I am happy to be here. And I really want to thank, honestly, all of you for investing your time and money to do something for yourself, because you're here for that reason. And I also want to thank our leadership, Neil, Bharat, Maraj, KP, Laura Lee, all of them, and Rahul, all dear friends of mine. And honestly, it's just an amazing journey. So I'm proud to be here, and it's really an honor. Thank you.
Thank you, Madam Chair.
Good afternoon, everyone. My name is Sanjay Patel. I am with MHG Hotels based in Indianapolis. Actually, I am based in Boca Raton, Florida here. We have an office in Boca as well as Indianapolis. We are actually in multiple business. Our main business is hotel. However, we do self-storages, multifamily, student housing, general contracting. Currently, we have 8 hotels at a various stage in construction, from footers, foundations to under roof, or in planning stage. I have 2 boys who, my 2 sons, they're here in audience. We all work together. It's a family affair. Both of my daughter-in-laws also work as a family business. I started back in 91, bought my first hotel in Indianapolis, and that's where back in 1991. I actually attended my first AHOA convention in 92, 93, something like that. It was in Nashville. Came a long ways from those days, and the enthusiasm in these young professionals here, it's great. Great to see all these people who are wanting to be part of this industry. It's a great industry, and I cannot be more proud to be in this industry, and fortunate to have my kids in the same industry as well.
Thank you, Sanjay bhai. So, Jagrati, let's start with you. How did you get involved in the hospitality industry? Or I want to hear about the first step that you took, especially moving from India. Why hotels?
Yeah, no, absolutely. So, like many of us, hospitality or owning a business is kind of like in our DNA. And I actually believe that. My story is a little bit different. I was born in Surat in India, and I grew up over there. I came here when I was 15 years old. My father had a business. My last name is Panwala, so for those of you who know here, Panno Galdo in India. So he used to take me on a business trip. So when I was just 8 years old, 3 girls, 1 boy. But my father never differentiated. And again, think about this I'm going to give up my age here, but think about 30, 35 years ago in India, for a father to tell her daughter who's 7, 8 years old, saying, you know what, there's absolutely no difference. You're going to come to business trip with me. So I used to go on local trains from Surat to Kolkata, Surat to Bombay with my dad. And that's how really he taught me a way of business communication, relationship building, community involvement, all that stuff. Honestly, was for my dad. Then when we came to America, obviously, just like most of us, struggled through, going to school, working evenings, all of that stuff. I went to college. I went to a small state school, and I was majored in business and economics. And I just knew that I wanted to own my own business. Didn't have any money. So once I graduated from college, I actually just started working for an insurance company because I said, well, let me just try something, make some money. And when I was prospecting, I actually met with a hotel owner who was telling me that, hey, I'm not really doing good in my hotel. And his hotel, I knew the market. He was about a mile away from what actually my apartment was. So I knew about the hotel industry. Some of my extended family was in it. So I just wanted to I kind of did a little bit of research about the market. But honestly, it was a risk. I was 22 years old, and I said, I don't have any money. I had $35,000 saved by working in my bank account, and we needed a little bit more money. And there was no financing or anything because I didn't have any credit at that time. So we ended up doing like a lease to purchase option and bought my first property. And that's how I got into a hotel business. Honestly, because when I saw the area and the market where the hotel was, I knew that there was a good opportunity. So a lot of risk. But again, I was only 22, so I was willing to take that risk. Now, at this age, obviously we do a lot more market study and make sure. But, younger I was, and I said, hey, take a risk, and that's really how I purchased my first property.
Thank you, Jagrati. And Sanjay bhai, how about you? How did you know that hotel industry was the one for you?
So I came from India back in '86 at age of 15. I stayed with my uncle and found a job in a hotel or motel at the time, and was housekeeping, doing housekeeping, laundry, and then I was offered another job at a different hotel as a general manager. I took that job. I was being at the right place at the right time. It was a hotel actually right across the street from Indianapolis Motor Speedway. The hotel no longer existed. The Motor Speedway ended up buying the hotel and made a parking lot. But there used to be a hotel there that I managed. And so the owner lived in California. And I had, they had a mortgage on it. So the bank came out to inspect the property. And, I hit it off right. And, I was showing him around. And we became a friend. And then, one thing led to the other. And, what do you want to do? I was 19, 20 years old, and I said, one day I would like to buy my own hotel. Him being a banker, he, back in '86, if we hit the downturn back in '86, and the property that I bought, my first property that ended up going to the bank, which was a different bank, whom my friend who came to visit the hotel that I was managing, we got hooked up that way, and then found an SBA loan, and that's how I got in. So I guess it's being at the right place at the right time helped me get into to acquire my first hotel, and that's how I got started. And then 2 years later, I built another one, and 2 years later, I'm building two of them at the time, and then there he goes.
So Sanjay, you just mentioned about how you financed the deal. Can you talk about what kind of SBA loan was it, and how hard was it back then to take over, especially your first hotel?
So my first, the hotel I still remember, I purchased it for $735,000, and it was an SBA loan that my friend was able to find the money for from a local bank in Indiana. 15% down payment, I believe, and it was 7A loan, which was pretty good deal. I believe that at that time the lending limit for SBA was very small, 500,000, something like that. I can't remember the exact number, but it was very low. But it was fairly easy to get the loan through SBA, and that was my first loan through SBA. But then I ended up paying it off and got refinanced through conventional, pull money out, build the other one, and.
Absolutely. And Jagrati, what about you? I know the first hotel you purchased was lease to own, but what about the second hotel? How did you finance that deal?
Same thing, it was an SBA loan. After the first property, over maybe like in 3 to 4 years, we were able to pay off so we were able to build enough credit, and we had valuation because the property that we bought, it was only, we bought it for $2 million, and then within 3 years, the valuation of the property was more than double. So we had a lot of liquidity, so it was much easier at that time to get a loan. And honestly, after the second property, after the first property, I joined AHOA, and we'll talk about that a little later. I think that's really where I got a lot of connections by meeting people when I started actually joining AHOA and started attending events, which was in 2001.
Yep.
Yeah.
So Jagrati, let's delve deeper into your leadership roles in AHOA. How was that, especially being our first female chair of the association? This association is older than me, and you being the first one, was it difficult to get into? Can you talk about some of the challenges that you faced, especially when you ran your first few elections, getting on the board, and the board dynamics versus when you ran for secretary and officer position, and especially when you were the chair, because you were the chair during the most crucial times in recent history. It was during COVID. So if you can talk about that, share that with our audience.
All right. Hopefully, I won't take really long on this. It's a long story, but look. When I bought my first property, I really didn't know anything about the hospitality. I didn't even know how to run a hotel. I was like, okay, this is, I was just pretty much trying to talk to family members, talk to anybody and everybody. And then one person told me, hey, that there is a big hotel owner community and they have a convention coming up in Atlantic City. I said, okay. what is it? He said, it's a AHOA. I said, I've never heard of a AHOA. So I said, okay, let me go to the convention. So I walk in the convention, and I still remember in Atlantic City, and my eyes just open up. To see, like, there were at that time few thousand hotel leaders. I just felt like, okay, I wasn't alone anymore. And that was my first experience being at AHOA. And honestly, after that, I never missed the convention. I attended all the events. After a few years of being in AHOA, just being a member, because I was very socially active in a lot of communities as well, and a lot of people recommended that I join AHOA as a board member. So in 2001, I ran for election again. I was very new to AHOA. I really didn't know the dynamics of the board. I just knew as a member what AHOA provided. So 2001, I ran election. I won election in Las Vegas. And then about 3 years later, I ran another election. Actually, 6 years later, I ran another election for the female director position. And, that position was important to me because what Tejal and, Lena and Nancy and Purnima, a lot of women, what they have done, it's a lot of work that goes into it. So bringing women participation into association was the top of the priority for us. So that was my role for 6 years. But one thing that I really noticed that, made my decision to become a chair was not in having enough diversity in a leadership, right? Think about any organization, any company. If you have everybody who thinks alike or talks alike or looks alike, you don't have a lot of progress in this organization. So while I was a board member, I knew that the decisions are always being made at the top of the top level. And I can say that, hey, somebody else will do it. But I just felt, and of course, with a lot of conversation with the family, with my team, because I also knew that I was leaving my business and my family behind for a while if I'm taking this position, if I'm going for it. It wasn't easy, especially being a female. It wasn't easy. But you know what? At the end of the day, I knew that this is something that needed to happen for the betterment of the industry. So I ran for election, and I won actually in 2016, I believe, as a secretary in Nashville. I think the biggest challenge, I would say, as a chair, and I shouldn't even say challenge, for me, there were few really important things. Number one is, as a leader, every decision we made, we wanted to make sure, and Neil was a AHOA secretary the year that I was a chair, so we worked together on a lot of initiatives. But one of the biggest things that I always want to make sure that every decision that we make as a leader, how that it affects the association, not just today, but 5 years, 10 years, and 15 years down the road. And the reason I'm bringing this up to you guys is because whatever decisions you guys make right now, even for yourself, for your company, always think in a way that, hey, this might feel good right now, but how is that decision going to affect me and my company for a longer term? So always having a long-term thinking. The second thing was an obstacle, a challenge, was building consensus. And as you all know, the bigger team you have, the more personalities that you're dealing with. As a female chair, when you have 32 board members, with most of the board was male, that's not an easy task. And working with all the different personalities, right? And I'm so grateful that I had an opportunity to do that, because building consensus and bringing 32 different personalities together to come to an agreement, to make a decision, I feel now that after AHOA was done, like I use that skill now in my own personal life, because I can walk into a meeting, I can walk into a board meeting, and I can tell, okay, if somebody's, has a different thinking, I know exactly how to deal with them. And also, one thing I realized, that everybody who volunteers in AHOA, whether it's committee members, ambassadors, board, or officers, everybody has a good intention. It's just a different approach that everybody takes. And I think once you realize that, then you're not thinking that you're on this side or that side. So try to keep things together as a chair wasn't important to me. And that was also a challenge for me.
Thank you, Jagrati. And Sanjay bhai, you talked about your first deal when you financed it. It was through SBA. Let's talk about the last deal that you did. How did you finance that deal? And if you can give any examples or where the city was and so on, it would be appreciated.
Totally different. Few more zeros got added to it. um, the finance, there is 10 million different ways to skin the cat. SBA was in the beginning, if you're starting the first time, it's a perfect vehicle to finance, getting into your first hotel or building your first hotel. Deals that we do now, those are, like I said, you got to add a few more zeros to it. And, there's different engines available, different mechanisms are available. The last deal, for an example, we just purchased a hotel at West Palm Beach Airport, all right? And as you know, the interest and, all the higher interest, we found our lender from overseas. So we got a bank from Europe to come and finance that project for us. Obviously, the banking system in Europe works totally different than in America. So the rates are different. The whole term is different, right? And it changes, right? So a lot of people make decisions based on a current environment, financing environment. It could be your inflation or whatever it may be. So those of you who are thinking of, building a hotel or buying a hotel, it's a 20 years process, right? So interest rate may be 8% today. It may be 4% 2 years from now. So why would you make your decision today based on a current picture? Because this is long-term investment. It's a 20-year investment, right? So it's ups and downs. So don't get discouraged with higher. As long as obviously you got to do the underwriting, the numbers got to work. You got to create certain. You got to support your debt coverage ratio at certain percent, which your lender will require. But if it may be thinner currently because of the current rate environment, it may change in 2 years. It may change in June as Fed just announced that they're expecting to cut the rate, right? So the whole picture could change. So don't make the decision based on today's snapshot because it could be different tomorrow.
Yeah, and I'll agree with you, Sanjay bhai, because honestly, even myself, I've heard from many people that, hey, I'm ready for the project, I need to do it, but I'm going to wait a year or two until the interest rate. I said, but this is not something that you purchase and then, unless you're in the acquisition and then selling right away. If this is your first project, think of it as a long term, right? Because the rates will change, the market will change, the demand will change. I mean, you think about our industry, how much it has changed over the last 20 years, right? The way we used to deal with paper and pencil, okay, here's the down payment we're going to give and lease to purchase option. A lot of those things have changed now, right? So it's an evolving industry. So if there's a project, that is obviously after market study and for analysis, no reason to wait.
Right. So don't get discouraged. Right now we probably have close to 12 or 13 projects, hotel, self-storage, multifamily, student housing. Those are under construction. From starting of the construction, and some of them are opening up. We have one student housing project that is opening up in next 2 months. The entire project, how we underwrote the project before we started the project, the way it looked then and the way it looked today, before even opening it, it looks totally different. A lot of things has changed in between here, right? I mean, you have 5 interest rate hikes and inflation and the construction material has gone up and so forth, right? So it looks different, but it may look different again in 2 years. So we cannot stop that. You just got to continue on. So don't get discouraged with that. I mean, put 110% to everything you do and just get it to the finish line and it'll look different again tomorrow. Thing changes. Remember, success, as I was telling Jagru, success is not a straight line. Success is this.
Mm-hmm.
If it was a straight line, we wouldn't be here today probably.
So Sanjay bhai, we talked about SBA and a lot of people know about conventional. What are the other top mechanisms to finance a deal? If you can just briefly go over the top 3 financing that we can get for our hotels?
Well, those are different. I mean, if you're doing a new construction, if you're doing a hotel, if you're doing a multifamily, if you're doing a self-storage, so those are all different. But let's, being hotel conference, we'll talk about a hotel. So if you are buying an existing hotel, you can obviously, there are CMBS loans out there that you can.
And can you explain to the audience what a CMBS loan is?
CMBS loan is, let me put it in a simple term. It's a small little box. They put a dog in it. And the dog can play in that little box. You can't get out of the box. If you try to get out of the box, your loan is in default.
Yep.
That's what it is. I personally don't do CMBS loans. I've done it. I got burnt, and I'm done. There is some benefits to it. You get fixed 10 years interest rate, but then you get all kind of your loan documents are this big.
Yep.
I don't want to do brain damage with that. There is other money available that I can do somewhere else. I don't need unnecessary brain damage.
And during pandemic, people with CMBS
they would not defer the payments, and so they foreclose, right? I mean, the CMBS loans are it's a buyback securities. Basically, it's different funds from firefighter funds to police department funds, and those are the funds that get invested, and they get a fixed return, and those rules are set by IRS, and you can't get out of those. I mean, they have to follow that, so they would not defer it, or you miss a payment, 2 payments, you're out.
And can you also let the audience know that we cannot get out before 10 years unless we have to pay defeasance?
Correct. Exactly. You cannot once you're locked. That's why I said it's a little box. They put a little dog in this little cage. You just play in your own cage, and that's it. You can't get out of that cage. So if you can avoid that, great. But there is some benefits to it as well.
Yep. So let's talk about the benefits for a non-recourse CMBS note, because a lot of the owners here, a lot of the young professionals are acquiring hotels from their parents who may have low debt, and now they want to refinance it. And some may use the CMBS route to refi, take the money out, and have it as a non-recourse hotel. So what are some of the benefits of that?
Well, first of all, it's non-recourse. I mean, you obviously have the bad boys carve out in there, so there is certain personal guarantee involved if you do certain things, which you don't want to do. But anyway, so then you're personally liable for it. But on a non-recourse loans, you basically don't have a personal guarantee. So if God forbid, if the project doesn't work out, and if you want to hand the keys back to the bank, you give them the keys, and they cannot come after you for deficit judgment or whatever the case it may be. So you're off the hook. That's a benefit of it. Meanwhile, they can go as high as 80% of the appraised value. So you can pull out more cash if you have free and clear property and trying to do a second project or something. So those are the benefits. So low interest, fixed rate, 80% cash out. Those are the benefits for CMBS loans.
Thank you, Sanjay Bhai. Jagruti, you mentioned for your first deal that you purchased, you financed it through SBA, and friends and family helped you with the down payment. How is that different now in the last project that you did? If you can go over that.
So now, we've built a really good relationship with our local banks. And honestly, like all of our hotels financing, even if it's in a different market, they're willing to do it because just the relationship that we have with our banks for such a long time. I do want to step back for a second, Neil, and I know that, look, all of you are either maybe starting in the hospital industry or you guys are just maybe, trying to do something different. And I know it gets really confusing, but one thing I wanted to kind of take a step back and say that, look, myself, Sanjay Bhai, and also Neil, whenever we start in the hospital industry, we started with the foundation. So, before we get into, okay, these are the best kind of financing or these are the best brands or the locations, having that understanding and that experience, it's so valuable. And I can tell you firsthand, for somebody who's done housekeeping, the front desk, the maintenance, the janitor, all the work, and to be now into acquisition development position, you appreciate what your team does on a daily basis, but you also you feel that connection to the industry when you've done the foundation work. So I did want to bring that up just in case if that question doesn't come up.
Absolutely. And Sanjay Bhai, to you, like we also used family and friends to buy our first hotels. And now we're doing GPLP structure. So can you go over, I'm sorry? Yeah, GPLP structure. So if you can just go over the structure with the young professionals, because some of them may not know about the structure, if we can educate them on how do we leverage our expertise and where we don't have to put the whole down payment, where you can have general partners and then you can have limited partners. If you can go over a scenario for me.
So I'm probably not the best person to ask that, and I'll tell you why. We don't have any partners. I don't have any partners. We do everything, so we don't bring in anybody's outside money or investors. So everything we do is just in-house. But I know how it works, raising the equities from friends and family, or, you can find hard money as well. There are a lot of capital company. I saw a lot of booths out there with the capital company. But I'm probably not the person to ask that, because we don't raise any money. We don't, we do everything ourselves. So we don't have any partners. So maybe Jagruti can.
So I've invested last year. The two investment I did with a very well-known company, and one investment I went as an LP, and one investment I went as a GP because I found that project. And the way it works, I would have to have the entire slideshow to explain. But basically, if you have, you find a development, which is, whatever the cost is, 10 million, 20 million, 30 million, 40 million, whatever it is, and whatever the down payment is. So you have a GP who are the one who has found the property. And then if somebody wants to invest, let's say this table of 6 people here want to invest in a hotel with me, they come as an LP partner, right? So whatever you're investing, that is the only risk you have. So if your investment is $500,000 or $1 million or $250,000, whatever, that is your risk. And you are given either a preferred rate as preferred return, or a guaranteed return, depending on the deal. But it's a less risk if you're getting into this business, saying, okay, I just want to figure it out how this works, and I just want to invest. I don't want to take any headache of liability or operations. Then this kind of projects are good. And there's so many. I mean, if you just walk around here in Hawaii, you're going to find so many people who are doing this GPLP. But for GP, it's a huge advantage, because honestly, they get their money back right away as soon as a lot of the LP's investments come in. So it's always great for GP, but being an LP is also good for people who are like, okay, I don't want to take a huge risk, but I can take a risk of the principal. It works great, and as long as you go with the company or organization that has a lot of experience and they've done a great job, and the history, I think it's a great way to also get into hospitality.
Yep. And I just want to summarize what Jagruti just stated. So in a GPLP structure, for those of you who may not know, you have the general partners who sign on the loan. And then you have the limited partners who don't have any liability, as they're the limited partners. But the general partners, depends on how your deal is structured. You only have to put down as general partners about 20%, maybe 10%, maybe 30%. How you structure it, the rest of the down payment comes from the limited partners. And then any profit, and then you would tell the LPs that you get an 8%, 10%, however many percent it is, you get a preferred return. And they get paid first. And then if there are any profits, you can either split it 50-50, or you can split up based on whatever the down payment was. So your down payment, if it's $1 million, now that's shrunk to $200,000, but you take close to half the profits as a GP. But you should be able to sign off on the loan. You're doing all the work, but at the same time, you can charge fees for the work that you're incurring and the work you're doing as a company. The fees, you get paid, but any profits you cannot touch until the guaranteed return, the 7, 8, maybe 9, 10% is paid out. And anything after that, you can split it 50-50 or however else you want to split it. So that's a new program that, well, it's not a new program, but a lot of our owners are now doing this program because it's less risk for us, not only on the LP side, because we don't have to sign off on the note, but also on the GP side. If you're doing all the work, then you should be compensated for the work you're doing. So
there you go. I said 10 million ways to skin the cat. Added 10 million one.
Absolutely. So let's talk about some of the challenges that we're facing in the industry right now. And Sanjay bhai, what are your thoughts? What are the top 3 challenges that we are facing as an industry?
The top 3 challenges that we're facing currently in industry is cost, construction cost for new builds. It is out of the roof, and to be honest with you, I think some of these middlemen are taking advantage of things. I'll give you an example. We just opened up a Hampton Inn, and the electrician comes up and says, "Man, we can't get those gang box. They're $5 and $6 a gang box, and we can't get it, and we're gonna have to have a change order, this, that, and the other." I had my construction side did some research. It was absolutely lie. There was no shortage, and I could have ordered it, or my construction guys could have ordered it and got it on the job site on a timely manner. But it was just another way for them to make an extra. I think it's literally a price fixing when it comes to construction. And that's what, making the price go up and the numbers doesn't work. That's one of the challenge. Obviously, interest rate right now where it is, it's becoming harder and harder for a project to be underwritten, and so that's a second challenge. And third, I would say from operation side of it, you have to think outside the box about the employment, right? So getting a talent. Currently we are in 18 different universities that we recruit from, and so we have to think outside the box about that as well, right? You can't just place an ad on LinkedIn or something and expect proper talent to come in. You have to actually acquire the talent, right? So you can either hire or you recruit, one or the other. I mean, if you hire, means you post an ad and whoever comes in fills out an application, and there you go. But that's what you're gonna get. Or you have to think outside the box and be proactive and be in universities and colleges and, get those graduates out of there. And that's what we do right now. I mean, that's how we get most of our talents is from different Actually, we have a program with 3 different universities in Europe that we bring in students from. So talent is another issue.
Absolutely. And Jagruti, what are your thoughts? Do you have any differing opinions to what the top challenges are for our industry?
Yeah, I think I agree with Sanjay bhai completely what he mentioned. But the one thing that we might not all of us think about it on a daily basis is the regulations. And I'll just give you a quick example. And you might be aware of this, you might not be, but there was a regulation about overtime pay, right? So if I have somebody that I'm paying, example, a sales manager or GM, and my property is in Alabama, where the minimum wage is lower, and if I'm paying them $35,000 a year, and they're working whatever, sometimes 30 hours a week, sometimes 45 hours a week, it depending on the on how much is needed, that threshold is increasing from $35,000 to $60,000, and that's just the one person. So if you really think about it and break it down, if you have payroll for $500,000, and if you have a full-time people, at least 5 of them, you're increasing that expense almost double. And again, this is a federal regulation. A lot of these regulations always come up. So I just feel that, look, you're all somewhat involved in AHOA. It's important to have a relationship with your representative. I'm sure Sanjay bhai, you probably have a lot of connection in Miami as well. And it's important because if anything happening in your own district or in your state or in your city, you want to be able to call your congressman, your senator, and say, hey, look, this is affecting our hotels, and here's the reason. And because you're a business owner, they're going to want to meet with you. That's for sure. So I think it's really important to also understand that while we're running business, while we're worried about the interest rate, the inflation, the labor shortage, the regulations, when they come down, they're not, if you're not aware of it, like what Bharat said this morning, if you're not making the decisions, if you're not on the table, you're going to be on the menu. So that's exactly what my concern has always been, that, we as a community, we're doing really good job and, thriving in this business. But when it comes to regulations, the stuff that could really affect our bottom line, we're really not focused on. So that would be the only suggestion I would give, that, get involved, make sure your mayor, your congressman, congresswoman, your senator. You should have their phone number. You should go to their fundraiser. You should have connection with them. So when and if you need them, it's not the first call you're making to them.
Thank you, Jagriti. And I wanted to follow up on a question about, you mentioned earlier that you're diversifying your assets. So besides hotels or hospitality, what other industries are you currently in?
Yeah, as I mentioned earlier in my introduction, we're involved in multiple businesses, hospitality, financial service, adult daycare centers, and also internet marketing. And I will tell you a reason why we even made that decision. So in 2008, which you're all aware what happened, a lot of the owners either lost their property or to give the property back to the bank, and I was one of them. So we had 2 properties at that time, and we bought our 3rd property, which was the most expensive one, about 3 months before the market crash. So it was not a but we realized that point on, and I was 35 years old, and lost 2.4 million in one deal at that age. So we made a very strategic decision to make sure that our properties are geographically all over, so it's not just in one area. So now whenever I purchase property or develop property, the market and diversification is really important. And honestly, being a financial advisor, I always tell my clients to diversify. Make sure you're not putting all your money in one basket. So I've taken same advice for myself that whatever investment we have, we're diversifying into different segments. And that's really after 2008 is when we made a conscious decision to do that.
Thank you, Jagriti. Sanjay Bhai, how about you?
So I already said it once, but we do multifamily student housing, self-storages. I also own a construction, general contracting business as well. We started diversifying maybe 6-7 years ago. First, we got into self-storage. That came out pretty good. And then we got into multifamily, and then one thing led to the other, and we got into student housing. We have actually won 311 bid or something opening up before here in the next couple of months at Indiana University in Bloomington. But so we're in 4 different businesses currently. But we're always looking for other opportunities as well. It doesn't matter what it is as long as number works out.
Yep, absolutely. And if you could share, aside from hospitality, what other market that you're in or asset class is the highest risk, highest reward, and also the most conservative?
So think of it as this, okay? If you look at a hotel, think of a hotel as a stock. Self-storage as a bond. Hotel, stocks are more volatile, return could be greater.
Mm-hmm.
Bond, less volatile, steady return.
Yep.
I love that.
Yes?
That's a great
I'm going to quote you on that. And I'm going to jump to my last question. We don't have much time, and then we'll open it up to the audience. And I think this will be the most important question that I ask you. As Sanjay Bhai, you stated, you have your 2 boys here. How hard is it, or what are some of the challenges that you face? Because obviously your thinking and your mindset would be different from the next generation. If you can share that. And how do we overcome that? How do we work together as a team?
Absolutely, great question. Right, so when I started back in '91 and bought my first hotel, and after that I probably built 20 some hotels. Before my boys came in, they graduated from IU and came in, and we start looking at different things. And so when you bring, when freshly graduated from college coming over, it was a great paradigm shift for me. I would have never got into different businesses that I am in today without my kids. Having them by my side, we go to work every day together, we go to the office every day together, come home together. And those who are in the audience, their parents are, I've seen a lot of people who children's wanting to get in a hotel, but they have their mom and pop hotel that they're running, and it's difficult for them to let it go and let it take it to the next generation. I just tell them, let your children make decision and let them take it to the further next level. If I have not done that with my kids, I probably would be still in a hospitality
You
business.
wouldn't have a private jet.
I would not have a private jet.
And he wouldn't play golf 5 days a week.
I would not play golf 5 days a week either.
Let the kids work every day. And Jagrati, your kids are young. What are your thoughts? Do you think your kids will be in the hotel industry, or do you think that they'll diversify as they grow older and get into business?
I've told them what I've practiced for myself is love what you do. For me, the passion of the hospital industry and financial industry is so strong that I love it. So I've told my kids same thing. My daughter did do, while she was in high school, she worked 2 summers at our properties and she did the front desk. And I remember her telling me that, Mom, it's like, I'm meeting so many different people. Because, when the kids are going to school, it's almost like, okay, they know same people, they're promoting in a hotel. Like you have people coming from international, different part of the country. So for her experience was just learning how to deal with different people, right? So we'll see if she wants to be, but as long as it's passion for her, she'll have my support. My son wants to be a chef. He's already told me that because he loves his food. He loves cooking. So that's his for now. But yeah, at the end of the day, look, I love this industry, but no, that doesn't mean that is a right for everyone. You have to love what you do, because if you do something that's more about just the money part of it, or my dad told me what to do, or my mom said this is what I need to do, you'll do it for a little while. But at some point, either you'll give up or do something else. So it's better to do something that you feel passionate about, that you feel good about, and you also feel a purpose behind it, which fortunately, the 2 industries that I'm in.
Thank you, Jagrati. And before Dylan closes the panel off, we wanted to see if anyone in the audience has any questions for us that the panelists can answer.
We love questions.
Dylan, there's one in the back, and there's one right here as well.
I had one question.
Can you also state your name and where you're from?
Yeah. My name's Alan Bogle. I'm from Tyler, Texas. So I'm only here because my parents brought me here. I'm a senior in college, and I'm like in software. So I'm studying computer science right now, and I just wanted to ask, because I do want to get into the hotel industry, but I don't have a lot of experience with, especially like the finances and the economics part of it. So it's just like going around with that, just being someone who's in a totally different industry, trying to learn hospitality. Like I've worked in the hotels that my parents own, but never like seeing the actual finances part of it, talking to banks, all that. So I'm just mostly like, I think it's more of like a confidence issue. Just trying to get around that.
I'll start with, first of all, congratulations, you're heading in the right direction. So if you go to the SeaWorld here, right, you'll see those dolphins. And you'll see the show of a dolphin, right? They hold this little stick, and the dolphin comes and they jump. That dolphin was born not jumping. She did not know what to do with that stick if you put that up there, right? So if you bring dolphin from the ocean and put them right here and tell the dolphin to jump, I don't think that dolphin's going to jump. That dolphin started when that dolphin was young. They put it probably a little stick on the bottom and give them for some food, and the dolphin comes and got over the stick, and next day more food, they raise the stick, keep coming up, and then now the dolphin is jumping 6 feet high in the air. Yet the dolphin doesn't know that she's putting out a great show. We're sitting out there and we think it's amazing, right? And we applaud that. Same thing, you're just starting in. Start with a small stick, put a little foot, make a little jumps. Every journey begins with a single step. There is tons of information available through internet. There is crash courses available on MBA. There is a crash courses available on finance. When I got into self-storage or multifamily, what do you think? I knew anything? Not a damn thing. The business started after 2 beers, right? But you just start taking a step. One step at a time. Don't give up. Keep going. Keep going until you figure it out. Never give up. Keep going. Because the day you stop, then you're done. You're never gonna get there. Just get that little jump going on that little stick, and then all of a sudden, in three conventions later of how you come here, and you be jumping that 6-foot stick, and people will be going, great show. So don't stop. Keep going. You'll figure it out.
And few conventions.
Put some time into it. Put some research into it, and you'll get it.
Yep. And few conventions later, he'll be sitting up here with us.
Exactly.
So
I'll just chime in on the more on personal side of it. That look, it's you're here today, right? You're networking, you're meeting people, you're meeting a lot of the young generation. Network with everybody. Network with first generation, second generation, because you'll never know within the conversation, you'll get the solution. Whatever the questions you have, you've had the answers. One of the best thing I feel that I've done in my career is network and building relationship with so many people, whether it's a brand leader, to a industry partner, to our AHOA members, to female hoteliers, to young professionals. I think that's the key, because when you build that relationship and you have that connection, when you need something, you know exactly who you want to reach out to. So attend AHOA, attend your local events, attend other industry conference. But like Sanjay Bhai said, like, don't give up. It takes a little bit of time, but you have so much resources now. I remember when we started, we had really no resources. We were trying to figure it out, like who to talk to. But now with AHOA, you have resources. You've got educational sessions. You've got people to talk to. You've got owners who've been through the same steps that you're going through right now. So take advantage of all of this.
thank you. And Dylan, there's a question. I think Ria had a question. And then there's a question, Arpit. Is that you? Yeah. There.
So my name is Ria Patel from Cincinnati, Ohio. My question is, what is a piece of advice that you can give family businesses that are just now growing? Specifically in our family, both of my parents' children, me and my brother, are getting into the business. So what's a piece of advice on how to handle effectively generational wealth?
Sorry, Ria, hi. So your question is, how do you transfer the generations of? Okay, so I mean, first of all, it's a conversation with the family, right? With mom and dad, and say, okay, what is the and it should be an honest and open conversation, saying, are you, if your father or mother, are they ready to retire, or do they need the time, like 5 years or 10 years, right? And then you work with somebody who can do a succession planning, because you want to make sure, like Kevin and Laurie, I don't know if you heard this morning, but he talked about the trust planning and stuff, and all the steps are necessary when you're doing a generation planning and making sure that all the assets are being transferred to you in a most tax efficient way. So I think the number one thing is just having a real conversation with mom and dad, like, oh, what does the future look like for us, right? And what is it that and I think that's the first conversation. And then you can get a little bit more detail and involved in working with an advisor or an attorney, trying to figure out what paperwork you need and what is the best way to start transferring those assets to the next generation. I hope that was your question. I hope, okay.
And Jagrati, maybe we can talk to Bhavesh Bhai and expedite that process.
Yeah, I did not want to say the dad's name. I know dad, but I said.
I think Arpit had a question here, Dylan.
Hey, my name's Arpit Patel. I'm from Gatlinburg, Tennessee, and I'm an independent boutique hotelier. But my question to you guys was, every time I find a deal crossing my desk, I have a ton of optimism being somebody younger, and I try to pull all the levers to make it work. But in your wisdom and time in the hospitality field, did you guys ever find any guardrails that prevented you from, betting the whole house on one thing?
So the question was, he's looked at multiple deals, and he's always had his guard up when it comes to whether or not should he go 100% into the deal. Has there been any times where you have second-guessed yourself whether or not should we go 100% in a deal? I think it was about the risk that we take. Is that what the question was, Arpit?
Did you ever set yourself any... It was more about, did you ever set yourself any guardrails when you were younger that prevented you from doing anything that really stepped you out of your field or put you in an uncomfortable zone?
Well, first of all, you got to take a risk. Secondly, when we do the deal, I mean, we have clear, we have a checklist that we follow, right? You got to underwrite the deal. If it makes sense, you do the deal. If it doesn't make sense, there is 10 million other deals out there, right? So there is not only just one deal. If it doesn't work, you move on. There is, I mean, you can get 30 deals in 1 hour. You set your check marks, do your underwriting, make sure whatever your expectations are out of the deal, right? Whatever return you're looking for, whatever debt coverage ratios you're looking for. If all the check boxes are marked and if it works, then you're in. If one of the check box doesn't mark, you're out. Move on to the next one.
Absolutely. And one thing
Right?
to note.
Real estate, listen, these deals are real estate. You don't fall in love with real estate, right? I mean, at the end of the day, we're doing this to make money. We're not here to make a love with freaking real estate.
Yep.
You just, if it doesn't work, move on. There is plenty other out there. Right? Don't be attached to the deal.
So what Jagruti said, I know she doesn't have a mic, is be emotionally attached with the industry, not with the actual asset.
Right.
Keep that in mind.
If it doesn't work, move on. Next one.
I think Dylan Bonnie had a question over here. Oh, okay, perfect. And questions up here.
Hi, my name is Nigam Patel. I'm from Atlanta. I had one question. So, as a young hotelier, so if I'm looking for a loan to buy property for the first time, being so young, having credit that's limited and limited access to backing that way, what are some good questions or good ways to approach like a lender or a bank when trying to get actual capital?
So again, this lending business changes. So you may call a bank and they say, well, our bucket is full and we're not doing any loans. All of a sudden, if you call them next month or 2 months later, you'll get a totally different answer because their business also changes every day. When they're holding a funds, if they have a payoff and they're sitting on this money that they're paying interest on, they need to lend out. Right? So their business also changes. Once you make a phone call to the bank and say, well, we're not doing any loans or whatever, I mean, our buckets are full, call them again in 2 months. Call a different bank or call the same bank in 2 months, I'll guarantee you'll get a different answer.
Jagruti, please.
Look, I did my deal lease to purchase option, right? But there was a comfort level. I don't know how many owners would do that at this point, unless it's like, really close relations. It's not a bad idea to do your first deal by going in with somebody, right? At least you get your feet wet. You kind of see what and when you get in this deal, don't just invest. Like try to go to the properties, try to see what's happening on the operations side, right? So you're at least getting a little bit more comfortable with it. But I would say like if some of those things don't work, then look for partnerships. And I can tell you there's many people who are always looking for, okay, so if you want to come in the deal. And so that's options are always available. And again, those options are available by just talking to people, those deals open up. It's just making sure you're connecting with everybody, right? Don't just stay in your circle that I know my 3 friends and that's what I'm going to hang out with the rest of the Yahawa. Don't do that. Make sure that you are walking around, meeting everybody, introducing yourself, even somebody that you don't know, because you just never know what kind of connection you're actually making with people.
Yep. And if you want to go in on a boat, your friends over there will help you on that. They're from South Carolina, I know them. Any other questions? One final question. We have Dylan, you pick.
Hi, I'm Saksham Kapoor from Melbourne, Australia. I think, like many of us, we're going to be working with siblings and parents. My question to you guys is, do you have any tips on working with family and, I guess, maintaining that work-life balance and not bringing work into, the family dinner, I guess?
Yeah, Sanjay bhai.
We got an international crowd here.
Yes.
Time management, man, that's pretty important, right? So I tell this to my kids all the time, right? We work 8 hours. Normal person works 8 hours, sleep for 6, 7 hours, and rest. You have it for yourself, for your grandkids or kids, or going out, whatever. On those 5 days of 8 hours, if you put in 2 extra hours, that's 20% extra. If somebody started working at age 21 and worked until 65, or 25 to 65, that's 40 years. 20% of that. So you lived your life 8 years more. So if the person dies at age 70, actually he packed 78 worth of stuff into 70-year life. Right? Just making few changes. I mean, you have 24 hours in a day. I have 24 hours in a day. Everybody else has 24 hours in a day. It's just how we pack our 24 hours. I manage to go to gym. I manage to play golf 5 days a week, 4 days a week. And I still manage to do my business. And I still have a free time. And my kids think I don't do nothing. I don't know.
It's about creating a team and delegating, right? And also letting it go, letting go a little bit. Otherwise, it could really become very difficult. But like what Sanjay Bhai is doing exactly is he's saying, look, I'm going to rely on my 2 amazing sons to handle the business while I'm doing what I need to do, making strategic decisions, and I think that's what it is, that you have to let it go, you have to create a team, and you have to delegate, and that's how you can actually grow in the business too, right? If you have 1 property or 2 properties and you're there pretty much all day and you're not really doing anything else, you don't really, the growth is very, very harder. So I think it's just, having this delegation system, I think that's what helps.
Thank you. We still have 1 more minute, and lucky for us, it only takes Dylan 30 seconds to finish, he said. So Dylan, if you want to close off our panel. Thank you for those who laughed.
Let's give a huge round of applause to our great panelist and our moderator. Thank you all as well for joining us today. Your presence here speaks volumes about your commitment to the future of the hospitality industry. Together, we're creating memories and building relationships within our communities, so let's embrace this opportunity to continue elevating the industry for our generation. Also, just a quick reminder, we do have our YP reception tomorrow at 6 p.m., and we look forward to seeing everyone there.
Where is it, Dylan?
At Ice Bar.
Ice Bar, nice. So the women hoteliers had food here, and the young professionals will get
a bar.
A bar. Ice bar. Good job, guys. And the panelists will be around. And if anyone has questions, y'all want to talk to them one-on-one. Yeah, please give them one more round of applause. Thank you, guys.